Welcome to Trading Lounge, the Gold Silver Report for Wednesday, July the 28th. This is the 10-year yields here, and we're just sort of bringing them on board. I still need to work out a few things with this, but I think all of this move here, I've done a bit of work on this, but yeah, from this spike low here as an A wave, a B wave, and a C wave here, just to make wave C of A here, that wave A up there, and then pulling back into the box here for wave B. So I think that there's one more little move to the, not a little move, I think there's one more move to the upside here for this wave C here. I need to unlock that. So for this wave C of this wave 4 here, can you see that? So another move up here for this. So in the bigger picture, if I can go to the weekly chart, maybe the monthly chart, just to fill you in here, just need to go over this a good few times. So back since 1965 here, where it was around at 5%, all the way up to the 80s where we had the high interest rate. So that's the top there in that regard. That's all the data I've got there. So I've just been counting down here as 1 and 2 and 3 and 4 and 5 here, and then an A and a B wave and a C wave here, right? And then from this point we've got 1 and 2 here, and all the way down for 3 to here. Cut a long story short. So 1, 2, 3, 4, and 5 here for the third wave. So yeah, I was thinking that this here could be an A wave here, a B wave here, and then a C wave moving up here, coming up to 3% here to the wave 4 of 1 lesser degree, or probably just above the 2 would be fine at 230. 2.30 roughly, because that's the 38.2% retracement level. So I think that we could be in a wave 4 here. So if these rates are going to spike here, then gold's got a bit of an issue at that point. So let's just, what I was thinking about this, if I could just go down to an hourly chart maybe. So I haven't counted all the way down here and sorted this out here for the low of the wave B here. Now there's a good case that we could be here, and this is the normal process for the downward side. This is a classic trading. It comes down, it bounces off, comes back, checks the level, and then fades and drops from here. But if it gets back on this level, this is really quite important, because this is, we've got 1 down here, and then we've got 1, 2, and 3 here that make up group 1. So if you know the trading levels at all, then 1.3 is going to be really quite critical. So I think that we could be in the same situation here as the currency is lifting off the low here. Okay, so if we get support on 130 here, so we'd have to get the first high above the level and so on and build support. But that would be the first sign of that we're going to have increased rates at this point. We're already seeing the dollar index. Let me just go to, oops, not the one I wanted. Let's go to the bigger picture here for a moment. This is a 4-hour chart, and this is 90, the medium level here. This is also the low of wave 3 here. So an A wave, a B wave, and a C wave over here for wave 4. And we've been counting up here, as you know. One of the things that we were sort of looking at here, because the wave count was a little bit scruffy towards the end, we called the high in here though, is that we need confirmation. So we need to either see a reasonably sized impulse wave, 5 waves pointing down, or we could look at 92 being the retested resistance using the trading level. So that's where they come into their own as well. So if 92 becomes the resistance, then we know that this market will just continue to move lower in that space. So we'll be going down for wave 5. So we'll just put these over here as 1 and 2 and 3, 4, 5 here. I need to adjust them up here to minor minutes. So yeah, 5 waves down for this wave 5 here for that. So we'll just say down 88, but we'll do all that work down there a little bit later. But basically 5 waves like this here. So really we're sort of looking at this first wave here. We could just about bring that up into about there somewhere. Bring that back there for wave 2. So yeah, we want to see a decent sort of little impulse wave down here for this first. I mean, this could be much lower. This could also be down here as well, but one step at a time. So yeah, anyway, we've called the top in. We think that it's in, but we're trying to confirm it. We confirm it by having 5 waves. I know we got 5 waves in the first wave here, and then we got a correction. And then we've got, I think this is down for 1 and back for 2 here. So I think I was playing around with this on was it the minutes? So let's just go to the minutes. So from the top here, we'd always looked at this as 1 and 2 and 3 and 4 and 5 for 1 and back for 2. And then down, I'm thinking this is all wave 1 here and wave 2 back here. And then wave 3 here, 4 here. This is, yeah, the smaller version here, just to make wave 3 here and 4 here, and then 5 down here. So this is what we're trying to do, is count those 5 waves down. All right, because we've taken out the low here, I think we're on our way. I think that's kind of confirmed it really, but I'm just a bit of a scaredy cat to call it in officially. But I think that is the case. And yeah, so if this pushes down, we might see those yields push up. And also, you know, this is going to affect commodities in different ways as well, obviously, the US dollar index. So all of that said, coming into the gold area here, I want to just go back to the starting point here. We're looking at gold in the bigger picture in 2 ways. One of that, we've got wave 4 in play here, and we've got this as wave 1 and 2 here, and then 1 and 2. It's always been a long shot. Even when this was coming down this hard, it was pretty hard to put that wave 2 there, but we did it anyway, and we'll see how this goes. So it's possible to call this as 1 and 2 into here as well. So this is one way that we're looking at it. The other way that we're looking at this is in a triangle pattern. So this plays it out like this a little bit further. So an A wave, a B wave, a C wave, a D wave, and an E wave. Not there's a big difference between them all, but it will be slightly different. So they're kind of going to be the same, but slightly different, same but different as it goes on. But yeah, these are the 2 that we're looking at the moment. So yeah, we're looking for, in fact, looking at this here, we can put this in different ways. We can put the A wave over here as well for this, as an ABC for here. So that works as well. There's a few different ways to count this. It's not the clearest wave count there is, so we just need to be a little bit more patient and really wait to see that support coming in on the 1800 and then the 1810 from that point. So we'll see what the market looks like a little bit further up at this 50-60% retracement level here for this, for wave C here. You know, if we come back down here, at least we know it's not going to scare us, or, you know, we're not going to be thrown out by it. We'll be all over it if it, you know, if something like this happens. But otherwise, on the bullish count, we just continue straight up here. You know, we'll go past that. So if we find the 1850 as the support, then we can forget about the triangle and we can continue to move to the upside at that point. So this little area in here, the way that the market's behaving in here, it's thrown me around a little bit and made me a little bit wishy-washy on what the actual count is. And I'm not 100% sure what it is, but based on the impulse wave that we got here, we're still looking for further upside here. There can be another little low come into 1780, as I mentioned before, but seeing the price sort of back up above the 1800 looks nice and healthy at that point. So let's go into the intraday from the triangle point here. We can go into into that count a bit more, and we're looking at it like this. So we can go long above the 1810 there. You might be able to go long a little bit earlier. It just sort of haunted me a little bit. This spike that we've got, see that low spike there? And then the move up from that. All right, that's in 3 waves to me. So that technically means that we should be taking the low out there. We should be taking this low out there. So we should see, because that's corrective, this move up here is corrective, we should take that low out here. So even if we do rally up there, I still think we should make one more low here in some way because of that correction. So I'm a little bit unsure about all of this, you know. If you go long here and you get trapped, well, then you'll just have to hold it from this particular point. I mean, this is just another way to look at it, but yeah, you can kind of see that move in here. You see how it's in sort of 3 waves there? It sort of bothers me a little bit. I can see that the saving grace is that I'm not a big believer of spikes. I like to go where most of the data is. So it's possible to count this down here as 5 waves. So that may have ended it at that point. But I just want you to be aware that it's possible to have a move like that before going off. The higher this goes, of course, and getting support, we've brought this down to the 1810 here. So the more support that you can see on the 1810, the better. So you don't want to just take that high out there. You want to be able to work that 1810 level, and that means a classic trading levels pattern. So that's the arrival, the reaction, the first high above the level, the ABC pattern here, and we've got too much stuff on our charts here, so that's that. Or leave those trend lines there. We don't need that, don't need that. Too many objects on the chart. Can I get rid of anything there? Anyway, you know what a classic trading levels pattern is. It looks like this. So this is what you want to see at 1810, the arrival, the reaction, the first high above the level, the ABC, and then over here. So it's just not a matter of moving through the level. You really need to understand this pattern here. If you want to get your market, you know, if you want to improve your timing, your market timing, then this is what we're looking at. So a classic trading levels pattern sitting on 1810. In fact, I'll take it away from that high there and just put it there. So we've got that there to work on. I'll just leave that. Don't need to go into the intraday on that side. The other count, coming back to the other count, which is this count here. Then we'll just go to the intraday on that. I don't know if how I've updated that. Yeah, I'm still looking for that one more move down. So I'll just chill out and wait. I'll just see how that plays out there, because one of the things was also too for this to come down was silver, actually. So with silver, I should just go back to the thing here as well. So this is the count that I think we've got for silver. I mean, we could still look at it as a bullish count, but I think that we've got, well, I think this move over here makes a nice A wave, and this over here is a B wave. Oh, I still got more stuff on there. Anyway, I'll try not to draw until I clean my charts up. But yeah, the reason for this is the A wave here is because, you know, if this is wave 2 in here, right, then this is, as a wave 4, this is just humongous, you know what I mean? So it's more like, this is a leg all by itself, you know, so this is more likely to be an A wave here, B wave over here, and then a C wave moving up there as and looking at all of this as a corrective rally. Now, I know a lot of gold silver bugs will dislike me for that, but I kind of just need to go from a pattern perspective and look at everything as I see it. But it's not final or anything. I need to spend time to go back over this and double check my work and things. But anyway, besides that, this down here to this low is the A wave. And then here we go an A wave here, a B wave here, and then a C wave to this little top in here. And this spike here is just part of this sequence here. So we've got wave 1 and 2 here, a spike for wave 3, back for wave 4 is an A and a B and a C for wave 4, and then up for 5. So that's the 5. That's all of that there just makes the A wave in 3. The B wave here is in 3, and then the C wave here in 5. So an A wave, an A, B, C for the B wave. And if it is a triangle, I'll have to lift this up to a higher degree of labeling as well. And then I was looking for 5 waves down here. So based on those 5 waves coming down, this is how I was looking at it here from yesterday, as you know. So we've got wave 1 here and 2 here, and then wave 1 and 2 and 3 and 4, and then we're looking for 1, 2, 3, 4, and then we're looking for that drop there. So we've got the drop. That drop's not finished. There's a bit more to that yet, because we've got to count 5 waves from one of these little highs here. So I can see that we're just at the bottom of the third at the moment. So there'll be more coming down here for that. And then if I've got the bullish count, then we would, from this low here, would move straight up from that point. So we'll be mindful of that, okay? But otherwise, from this wave 3 low, once this here finishes, then we'll need to focus on this being a wave 4, and then a wave 5, and then we can catch it over here. We'll be diligent here just in case I've got it wrong and we've got it as a bullish count, which I won't go into now because no point, because we still haven't finished this leg here. And even if we were going to go long, we'd need the first impulse wave off the low here. We need a classic trading levels pattern at the $25 mark, and then we could move up from that point. But I wanted to show you this because silver can drop further, and that means, well, gold could as well in that regard, you know. And that brings us back to GDX as well. Where are we? Metals here. I've sort of thought I'd done some work on this. I'll just have a little look here for a second. No, it's ABX I've done work on, wasn't it? Yeah, I've just been doing some work on the on other markets, because I think this is ABX, this is Barrick here, ABX. This is very much the same as GDX. So the constituents within GDX must be obviously just stocks like this, really. So it might be better if we look at stocks, but yeah, I mean, like I said, here we've got this as an A wave here. This is the monthly chart for Barrick, and GDX is the same. So an A wave, a B wave, and a C wave up here for that. So that's corrective. So we could easily have a move down here, further down. I know that you don't want to hear about that, but we'll see. I mean, from this low here to this high here, it's sitting right on the 61.8% mark. So I was thinking that would get a rally back up into this box. So down here is wave 1, back here for wave 2, and down for 3, 4, and 5. Because that's the way it's looking for me. And because this move down through here, right, this is a monthly chart. Let's just go to the weekly chart for a moment. I know this is a bit hard to take for gold lovers. But this move down through here really counts nicely as 5 waves here. That's why I've got it as wave 1 here, sitting on the 61.8%. And then looking at this as an A and a B and a C wave coming back up here. I mean, I could be totally wrong. I still need to do a lot of work on it. But I have been doing work on it. And I'll keep doing work on it. But it just keeps coming back to this bearish count. And then, like I say, GDX will be exactly the same as well. But we'll see. See this, it's hard to call this. There's a couple of things here. I don't worry about this spike here too much on this one, but yeah, we could look at this as wave 1 here and 2 here. We can't really look at this as wave 3 here, like we're doing with US spot gold, because this has moved down too far here. It's just almost over, probably overlapped this one here for that. Do you know what I mean? So this one here, wave 4 doesn't overlap wave 1. Well, if that's wave 1, well then that's overlap, isn't it? You know, it could be that this is wave 1 here and 2 here and then wave 1 here, and then we have an A and a B and a C wave which comes in much deeper here as well. So taking this low and this high here, that would bring us in down here. So this could in fact come down to the 61.8% mark here and then move off from that point, you know. Anyway, just looking at these and shooting the breeze. I'll just do more work on them. But I just think it's interesting that we can count this down here as wave 1, 2, 3, 4, and 5 here. That counts as 5 waves. So, you know, then this is corrective back to the 61.8%. So this is basic Elliott stuff. So we should be, you know, we can move lower from here. So, you know, if interest rates do push up, well, then that's, you know, that's the nemesis of gold, isn't it? Anyway, back to this is GDX here. So what I was thinking here, let's just go back to the daily chart on the bullish side of things. Just bear with me a second. So, you know, when you look at this on the daily chart here, and the same with US spot gold, it doesn't count very well down here as 5 waves coming down here from the top here. I understand that because you've got some of these spiky bits in here, but if you removed all the spiky bits, it would count quite nicely as an impulse wave down, which we can see on ABX. So if GDX is loaded up with ABX's stock, well then we could look at this here. This is Barrick, so this is a daily chart. So 1 and 2 here, and 3 here, and 4 here, and 5 here. So we've got this as an impulse wave. Anyway, just sort of going back over it, you know. Let's ABX, ABX, yeah, so GDX here. So I was thinking that, you know, because this situation that we've got with GDX here, like remember this move down through here, you know, people have counted it down with WXYs and so on, but I think it's more simple than that. I think it's just a 5-wave structure coming down, but you need to be a bit philosophical to see it. And then I've always been worried about this move up through here, because the thing is we could count this wave here as wave 1 and 2 here, not a problem, and we can get 5 waves out of this one over here. It looks a bit dodgy, but it's this 3rd wave here that doesn't really give me 5 waves in here. So that, I mean, we can count it as 1, 2, 3, 4, 5 here. That's cool. But I'm just saying this in the middle in here, this one here, I can't get 5 waves out of this. So I'm wondering if this is 1 and 2 and 3 and 4 and 5 here for the A wave, a B wave, and a C wave for the B wave up here. Even so, let's just say that, I mean, if gold goes straight up from here, well, fantastic. You know, I mean, great. But if it drops lower and tests these lows over here, then a little bit like silver, we should look at this as the A wave here, the B wave here, and the C wave down here, and get the bounce off a bit closer to $30 mark here. I mean, the thing is that this move down here, it also doesn't really appeal to be, doesn't look like it's corrective. It looks like it's impulsive, you know? And that's the thing, even when we do finish this little 5th wave off here, if it drops down a little bit further, then we're going to have to think about this here, you know, the 50, 60% retracement level. So, you know, we may bring this down to, I think I'll bring it just up I'll bring it down to the previous low, which is there roughly. So that means that this little box here, that can, I don't need that one, can that just move over? How do you grab that? Well, do it that way. That's the 50-60% retracement level there. So, you know, what we could see here is that the market comes down to this previous, just drops through here a little bit, gives us 3 waves to the upside here, and then drops down from that point. So that's what we've got to be careful of, this one here. So this leg here is going to be really, you know, up to the 61.8 is going to be really, really important. So yeah, so I mean, I've had this labeled as wave 1 up here with wave 2 coming back like we have done with gold. But yeah, I'm a bit more curious about this one here. I'm not sold on it yet. I think it's a great place to buy down the bottom down here. I mean, you know, if you're a longer term trader, that's a good thing to do. I've got some gold stock which is in the same sort of pattern down at that low there as well. But yeah, I'm not quite sure just yet. We don't have a really, it's not obvious. Sometimes things are obvious and sometimes they're not. When they're not obvious, and they might be obvious to you but not to me, and vice versa, and all these sorts of things, but I just don't see a good trade here yet for that. So where were we back here? So that was silver, and we've talked about gold a bit. So yeah, this silver one here needs to, it will rally a little bit and fade and pull back down into that space. Let's just have a quick look at gold again, just to get on US spot gold. So yeah, let's just actually, what was the other bullish count that I had here for this? Oh, that was here. Yes, it's not the one that we want though. I mean, that could be the low in at this point here. Let's just go back to the 1 hour chart just to check in here a bit further. Yeah, this is the thing that sort of haunted me here, because from this low here we don't have 5 waves up there, but I have to say, now that we've got this coming in here, I think we can move that over there. This could be something like an A and a B and a C wave here, and then this looking for the last low here. So it's possible to probably have that. We could possibly put that in there, but I have to say to you, I'm just moving into the guessing game at that point. I can see that it's reluctant. It doesn't really want to go any further down, but we also need it to move further up at this point too, don't we? So let's just move these out of the way a little bit. I mean, what we need to see here is an impulse wave, but if we don't see an impulse wave here, it's going to be to here, and the next support is 780, and then we move up from that point. If we get a classic trading levels pattern sitting on 1810, then you can go long from that point. Okay, it's pretty much that. So if you can see the market sitting, you know, not just trading above, it's got to come back and check it, you know, and it takes a bit of a wiggle and that to get, say like over here, there's a good example. So it could do something like that. So you may not see it until you get over, right over here with it, you know. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.